Today, we're delving into the currents of the housing market, deciphering the signals that 2024 is set to be a year of great growth. With conflicting data on building permits, housing starts, and builder sentiment, we've brought in an expert from the National Association of Home Builders to help us make sense of it all. In the ever-shifting landscape of the housing market, the journey from a potential housing recession to the prospect of a housing renaissance in 2024 has been marked by substantial twists and turns. Reflecting on the aftermath of a significant drop in home builder sentiment in 2022, the trajectory of the housing market appeared bleak. However, the tides have turned, and now 2024 seems poised to usher in a transformative era. Parsing through the data of today, where building permits are on a continual rise, housing starts exhibit a notable downward trend for the first time in 4 months, and builder sentiment experiences a surge, it's imperative to decipher the narrative that unfolds. To guide us through these intricacies, our expert from the National Association of Home Builders sheds light on the highs and lows shaping the industry's current state. As we explore the dynamics at play, it becomes evident that the optimism for the next 6 years is rooted in the anticipation of great growth. A pivotal year, 2024 is seen as the turning point, signaling an exit from the post-COVID slowdown and propelling the housing market into a phase of substantial development. It is during this period that the industry anticipates meeting the pent-up demand for both single-family and multifamily housing, offering a glimpse into a future characterized by vigor and expansion. Understanding the nuances of the headline numbers concerning starts, sales, and permits is crucial. It's acknowledged that there were significant figures recorded in the latter half of 2023, setting the stage for 2024 to truly take off. The anticipation lies not merely in isolated data points, but in the cumulative effect, creating an environment conducive to sustained growth and recovery. The narrative, as outlined by our expert, paints a picture of an industry on the brink of revitalization, shedding the doldrums of recent times and emerging with renewed vigor. Transitioning from the overarching narrative of a housing renaissance in 2024, we delve into a critical aspect shaping the landscape: affordability and mortgage rates. As we scrutinize the current state of the 30-year fixed-rate mortgage, which stands at 6.89%, the conversation naturally gravitates towards its impact on the demand for homes. While this rate is an improvement from a theoretical 8%, it still hovers above what many potential homebuyers might be accustomed to. The question arises: how does this relatively high mortgage rate influence the appetite for homeownership, and what might its trajectory look like in the next 6 months? Here, our expert sheds light on a compelling perspective. Contrary to the current figures, there's an anticipation that mortgage rates might witness a downward trend in the coming months. Reference is made to insights gleaned from Freddie Mac, indicating a proximity to 6.5% rather than the current 6.89%. This forecast instills a sense of optimism, suggesting that potential homebuyers could benefit from even lower rates. A pivotal indicator supporting this outlook is the recent movement witnessed in the Wells Fargo Housing Market Index. A substantial jump, particularly in the component related to traffic, implies that individuals are increasingly venturing out of their homes, exploring model homes, and potentially gearing up for a spring buying season. This shift in behavior aligns with the anticipation of lower mortgage rates, creating a conducive environment for those considering homeownership. Furthermore, our expert underscores the combined effect of lower rates and builder incentives. This tandem effort, aimed at making homeownership more accessible, involves not only reducing mortgage rates but also implementing price cuts and other incentives. The overarching goal is to entice prospective buyers into the market and, in turn, stimulate demand for new homes. The anticipation of lower rates and the proactive measures taken by builders converge to create an environment where potential home buyers might find themselves on the cusp of a favorable market, poised for exploration and decision-making. With a comprehensive understanding of the factors influencing demand and affordability, we now pivot our focus to the critical elements of supply chain dynamics and the role of local governments in fostering a conducive environment for housing growth. The intricate dance between supply chains and local governance becomes evident in the experts' insights. In numerous markets, local governments serve as vital partners, aligning their interests with those of home builders and development. However, this symbiotic relationship is not universal, and challenges persist, underscoring the need for collaboration to facilitate a robust housing market. Local governments, with their control over the land use and permitting processes, hold significant sway over the speed of land development, and consequently, the rate at which new homes can enter the market. The call to action is clear: streamline processes, reduce permitting times, and allocate more land for development. As we stand on the precipice of what could be a robust growth cycle, the involvement and support of local governments become pivotal in determining the pace at which the housing market can meet the burgeoning demand. Simultaneously, our expert emphasizes the need for readiness within supply chains. Lumber, wallboard, shingles, these components form the backbone of home construction. To avoid the pitfalls of recent years marked by high lumber prices and sluggish delivery times, there's a collective plea for supply chains to align with the imminent high-growth phase. Cooperation and responsiveness from suppliers become paramount, ensuring that the industry doesn't revert to the challenges faced in 2019, 2020, and 2021. Amidst the anticipation of a housing renaissance, the shadows of persistent challenges loom large, none more prominent than the ongoing labor shortage in the construction industry. Our expert delves into this critical issue, providing insights into the magnitude of the problem and its ramifications for home builders. Consistently trailing by approximately 400,000 jobs year over year, month over month, the construction industry's labor shortage is more than a statistical concern. It's a tangible hurdle impacting the very foundations of housing development. As our expert emphasizes, this shortage is poised to remain the single most significant drag on the efforts of home builders. The situation is highlighted by a real-world example in the Midwest, where growth aspirations meet the stark reality of insufficient labor. Even in high-growth regions like Fargo, North Dakota, the excitement about the future is tempered by the persistent challenge of finding and retaining skilled labor. The shortage, encompassing both quantity and cost considerations, compounds the complexities of bringing projects to fruition within reasonable timeframes. In essence, labor scarcity is not merely an industry woe, it's a bottleneck that threatens to impede the trajectory of the anticipated housing renaissance. As conversations revolve around investing in trades and encouraging the younger generation to explore careers in construction, the core message resonates. Unless addressed comprehensively, labor challenges will continue to cast a shadow over the industry's growth aspirations. Solutions lie not just in short-term fixes, but in a sustained commitment to investing in and fostering a skilled workforce, ensuring that the foundation of the housing market is as robust as the structures it aims to build. Shifting our focus to prospective homeowners, particularly first-time buyers, Segment 5 navigates the nuances of the current market dynamics and provides essential advice for those considering entering the real estate realm. Despite a notable 88.6% decline in single-family housing starts for December, our expert encourages a fresh perspective. The advice is clear. Now is the time for potential home buyers to explore new construction. This suggestion challenges conventional wisdom that often directs first-time buyers toward the existing home market. By considering new construction options, individuals may find themselves amidst a diverse array of properties tailored to modern needs and standards. Addressing the concern of affordability, especially with the 30-year fixed rate hovering around 6.89%, the expert introduces a silver lining. Projections hint at lower mortgage rates in the next 6 months, providing a potential window of opportunity for those willing to bide their time. For those worried about hefty down payments, the expert reassures that government programs exist to ease the burden. Low or even zero down payment options are presented as viable avenues, dispelling the notion that a substantial upfront payment is an insurmountable barrier to homeownership. If you found today's discussion insightful, don't forget to like this video and subscribe for more updates on the evolving housing market. Share your thoughts in the comments below. Are you considering entering the real estate market in 2024?